Okay, I hit the go live button. So,
All right.
usually what I do, I'm going to wait for the fabulous Jordan to tell me that we're all good.
Perfect.
Although I just saw it on my own thing, so I don't even need Jordan to tell me.
All
Jordan,
right.
I've replaced you with automation.
Wow. So goes Jordan, so goes the toll booth, right?
Pretty much.
Yikes.
All right, so we'll give people a minute so it notifies them. That was actually the first time when I hit the go live button and I saw it on Facebook, boom, instantly. Usually I have to refresh it 10 times and then it works.
Nice.
Oh,
I
sounds
think
like in
that's
Boca.
good luck.
Life in Boca
Yeah.
good?
Yeah, thank God. Thank God. It's
Filled
good
with
stuff.
old people and retirees.
It's filled with a whole mix of people.
It's a mix
All
now. It used to
cross-sec-
only be grandparents now.
It's a cross section of society.
Cross section. That's good. I'm glad there's a variety.
Yes, no, for sure. For sure.
It's fun. I don't go over there too often. Well, especially not in the last year or so, but I don't find myself that often in that part of Florida.
That part, I mean, it's about. No, I hear you. I very rarely venture south of where I live, or north. I just basically stay in a very tight corridor.
Right,
About
it's one little area.
Stay in a bubble.
Sometimes I have
No
to go to
mask
Miami and I'm
required.
like, it's so far away.
Yeah, I've said that to friends of mine who just moved down from New York. They're like, "Oh, you're such a prima donna. We would drive whatever." I'm like, "Whatever, don't judge.
You
You
get
know,
lazy.
wait a year
You
and
get
you'll
lazy.
see."
Yeah.
Wait a year, you'll see how it feels. Yeah.
Yeah, pretty much. All right, so we gave everyone a minute or two here. Should we get started?
Let's go
Ready?
for it.
All
I'm
right.
good.
All right. Hi, everybody. I'm Bet Hochberger, CPA, CGMA, and on this very special Finance Friday, I have a dear old friend, Seth Bassoff, who has more letters behind his name than I do, so I'm a little jealous. I'm not even going to read them all. There's just too many. Too many letters. He's too special. And we're going to
Thank
talk
you.
about some cool stuff you could do in retirement planning, which I know that those are words that don't usually go together. People don't usually think cool in retirement planning. So let's see. What could we talk about? All right. I'm going to have my first thing is I know small business owners generally have heard of a SEP or a Simple, things like that. What else can
Sure.
they do? Are there other things that are available to them?
Absolutely. So thanks, Bet. And I just want to qualify. I'm not a dear old friend. She means old in terms not of age. I'm not that old. Although I am.
No, you're old too.
I am senior to Mrs. Bet Hochberger, CPA. And so so there's definitely other additional opportunities for business owners in order to save for their retirement. There are obviously great options in the SEP or Simple IRA. But there are what are called ERISA-qualified plans. A lot of time, people might not know what ERISA means, but they're subject to an act from 1974 that provided other guidance in terms of retirement plans. There are a lot of times people have heard of 401ks. That is an example of an ERISA-qualified plan. So in terms of plans, SEPs and SIMPLES are designed, for certain types of companies and also certain types of contribution levels. By way of contrast, qualified plans or risk qualified plans like 401ks, profit sharings, defined benefit plans, they offer a big opportunity for savings, not only for the employees, but typically and equally as important, if not more important to the business owner, it gives a great opportunity for them to defer a lot of funds from taxes on their own behalf. So in terms of 401k profit sharing and the like, there are annual employee contributions where they can contribute anywhere from $19,500 up to $25,000, and then on a total contribution basis, they could actually contribute up to either $58,000, or if they're older than 50, up to $64,500. So it is subject to a lot of plan design, a lot of consulting behind the scenes on my behalf, for the benefit of the owners. But there's definitely big opportunities to save for your retirement on a tax deferred basis for company owners.
So, okay, so is this like something that's only available to like a big company? Like, do I need to have like 10 employees or more, or something crazy like that? Like, how small of a small business can take advantage of this?
Great question. So the perception might be out there that it only, you need a, 10 person, 20 person, 100-person type of company. Contrary to kind of that belief or understanding, could actually have either a sole prop or just an S Corp LLC election with one person.
One person can do this?
One person could do this.
Wow.
Correct. So
that's a lot of money to put away. Because a simple is only
absolutely.
like 13 or something, 13 grand a year. SEPs are limited to like 50-ish thousand, but that's a lot more. That's a lot more money. It's a lot of savings and taxes too.
No, absolutely. So I have clients of mine who have sole props or LLCs, but it's just call it a single, regardless of the entity, they have just one person working for the company. You could be a consultant and you're making a very good living and want to defer a lot of your income. I have one client who's deferring 64.5 in his 401k with profit sharing, and then another 150 or 200 in his defined benefit plan every year. So there's huge opportunities for saving.
Say that again. They're what are they doing? How much are they putting away?
So he's putting in his 401k and profit sharing plan around 60,000, and this is all for himself, right? He's the only person.
One person,
so,
right?
Yeah, so 60 grand for him in the 401k and profit sharing. Additionally, we set up what's called a defined benefit plan for him and for his benefit only. People used to call defined benefit plans pension plans, another, AKA, but defined benefit plan is the specific terminology. And he's able to put away another 150, 200,000 a year for that. God. So, cumulatively, he's putting away, 250 a year for his retirement exclusively.
That's incredible. That's incredible.
No, absolutely.
And that's all like a tax deduction, yeah?
Yep, absolutely. I remember one. I chuckle when I think about it. I sat down with a client of mine. He was a new client, and I explained it to him. And he looked up at me and said, "Is that legal?" And so it kind of took me by surprise as that was the question. But absolutely, this has been around since ERISA's been around since 1974.
Yeah, it sounds like it shouldn't be legal, right? Like, how can you put away hundreds of thousands of dollars and have that be a tax deduction?
Yeah, and it's pretty straightforward,
and
it's not a tax technique. It's part of the code. It's there. It's not it's just a matter of making sure you're partnered with the right advisor who also consults on this type of thing in order to make sure they can give you the right guidance. Because it does, obviously, when you're moving that much money, there are very distinct technicalities from an IRS and Department of Labor standpoint where you want to partner with someone who does this and not just kind of moonlights at it. We have over 3 dozen, plans that we work with locally and throughout the state and throughout the country that we do this type of consulting for our clients.
Yeah, this is not something that sounds like you could just like find a document online and just set it up yourself. Like, doesn't seem like that would be...
No, I mean, especially when it gets to the pension component, that actually requires more technical expertise. That requires using, and this is all handled for you if the client is working with me. But in the background for the defined benefit plan, there is an actuary kind of doing the calculations in order to see how much you are able to contribute to your defined benefit plan on your behalf.
That's really cool. Okay, so my next question. If I do have employees, right? Because like I have an employee, I'm probably gonna have a few more people by the end of the year.
Sure.
Do I have to do this for everybody? Like, do I put hundreds of thousands of dollars away for like all my employees? Which I'm sure they would love it, but I don't know.
Absolutely.
That's like that. I don't know that I can bankroll all that. Like maybe for myself, but do I have to do everybody, the whole company, if I set this up?
That's a great question, and as you could well imagine, that's a very typical question that I hear when kind of consulting on these type of plans. And if the answer was yes, you have to have equal footing for all your employees, I would probably not have several dozen plans. I'd have 0. So usually we're dealing with the company owner where yes, they want to take care of their employees. They definitely appreciate their input and their guidance and help in the business, and their partnership, but they don't want to provide the same level of contributions across the board.
Right. So not necessarily nothing, just not necessarily at that same level.
You got it. So great question. So when it comes to how there are calculations, again, behind the scenes where, so if you had that sort of scenario, I would request census information about you and your employees. I get an idea of who you are, your age, how much in terms of you want to actually on the top level contribute and how much you could support contributing. And then typically when we run scenarios like this, if we do a fully funded, defined contribution plan, which is the 401k profit sharing, and defined benefit plan, which is the pension plan, you're looking at, I want to say a ballpark percentage, the owner is typically, and the owner class is typically getting 90 to 95% of the contributions coming from the company, and the other employees are getting anywhere from 10 to 5% of those contributions. So there is what's called really permitted disparity in that regard. Yeah. So you're able to actually it's not level set. Like with the SEP, there is a level set, right? It's a contribution level. Right, so if I'm doing 10%, everyone gets 10%. Right. Which is great if that's what you want to do. There's no issue with that if that's where you're at. But you're usually contributing at a much lower level. But if we're talking that you're contributing to your plan, $200,000-$300,000 a year to your defined benefit plan, the likelihood that the company owner wants to give all those funds to everyone on an equal weighted basis is very low. They clearly can, but typically they want it skewed more towards the ownership class, and it is permitted within IRS guidelines, our testing for it. It's definitely there, and that's something that I go over with my clients on the upfront setup standpoint. To make sure we're meeting their objectives and what they're trying to achieve, and so they're well informed before anything ever happens.
Yeah, that's fantastic, because you do want to take care of your employees, right? But
absolutely,
you also don't want to bankrupt the company in the process. So
100%.
100%. So what happens if, like, you have a good year, then you have a bad year? What happens in those bad years? Do you have to keep contributing like this year after year? Can you move out of these plans? Are you stuck with it forever? That was like 10 questions rolled into one.
Yeah, I have one question with 20 parts, right? So I'll try to address all of them. Let me know if I left one of your questions in subsection 7. So do you have to always contribute at the same level from an employer standpoint? The answer is no, and we would go over kind of the ranges. So if forgetting or kind of putting the defined benefit plan aside for the time being, which is the one where you can really put away hundreds of thousands of dollars, just talking about 401k with a profit sharing component, there's different ways of setting those up. So in terms of employee deferrals, meaning not the company money, but your employees contributing, there's no obligation for them to ever contribute or contribute. So that's always off the table, if you will. There's no obligation from there. Depending on how you set up the 401k plan, there might be certain obligations on an annual basis, but is not set in stone. You could either have a kind of safe harbor plan where kind of the guidelines are year by year where you elect it. And I don't want to get too in the weeds, but I'm happy to, but I don't want to get too in the weeds. So one is an annual election. Then there's also what's called the other one is a discretionary profit sharing, and as the term says, it's discretionary. You don't have to do it. You can do it, and it's based on a calculation. In terms of the plan with the pension or defined benefit plan, there are, kind of the IRS wants to see that there is some level of permanence to the plan. They don't want it to be like you have one crazy year and then you defer all this money and then you terminate the plan, because they view that as a tax scheme. Right?
Oh, okay, so that's like you kind of fraudulent-ish, like.
No, it's not fraudulent. It's just
don't like it.
They don't like it, and so they when you establish a defined benefit plan, the feeling is that the IRS wants to see the plan has some level of permanence. So you want to keep in active contributions for a few years, but you don't need to fund at those maximum levels.
Okay.
There's different. There are technical ways of kind of figuring it all out. And that's part of the consulting process up front. So when a client comes to me, they say, here's my company, here's what's going on, and I do my due diligence and kind of give them what they're able to do, what the ramifications are, and they're all positive. But I want, I think an informed client is a good client, and so I like to share the information to make sure they understand everything that's going on before they engage, especially with that, because it's very foreign for them.
Yeah, and I think that's really
communication is key.
I think it's really important in general with like finance. So many people are not terribly financially literate, and this is really complex stuff. Like this is Like, this is
Sure.
a little bit over my head. Like, I don't know I've heard the words, I know the concepts. I don't know how it works. Like, I don't know what the mechanics are. So yeah, absolutely, you should, if you want to do these things, and they're fantastic vehicles, figure out, learn a little bit what it is that you're doing. Don't just, jump in. I think that's
Absolutely.
some good advice.
And I would never let someone jump in if they're working with me, clearly, because it's a client relationship, and I want to make sure they're fully informed. So it's a lot of understanding what your goals, what your financial goals are, and how those couple with what's going on the field, right? You might have a pipe dream goal, but we need to make sure from a cash flow perspective, the client's able to sustain it and know what they're doing and what the future could bring. But it's a consulting process, not a set it and forget it vehicle.
Right. My favorite question about retirement accounts, I've mentioned this to you before, when people ask, like, they're like, all right, set up the account. Do I actually have to put the money in?
So that's
that retirement account.
Right. So as we talked offline, that's been a question that's been asked of me as well. So yeah, they are fully funded on a cash basis. There are plans like that. Those are not qualified plans. Those are non-qualified plans, where you don't need to fund at present on a cash basis. It's a contingent liability. But in these cases, we're talking about retirement plan, qualified plans. If you want $1 in the plan, you actually have to put $1 in the plan. It's not accrual accounting. I guess it's cash accounting. Like, there, right? Money is real, right? If you want to see the $1 in the account, it actually has to go there.
I'm having like terrible flashbacks of accounting classes from a million years ago. Once I how long ago it was, where you had to calculate those like pension deferred liability thing, and it was a nightmare. It's a nightmare.
Right. So that nightmare is not put on the client, right? Clearly, that whole logistics of calculations and everything, I'm the intermediary, if you will, in our relationships with clients and regarding the plan. So let's say you're the client and you want to set up the plan. You're coming to me for kind of guidance. We work with third parties in order to do the calculations. They're not kind of bringing you into the scope in terms of, hey, this is how the calculation works. This is your accruals. Clearly, it's at your avail if you want to go through it. Most clients just want to run their business and make sure this is taken care of properly. So the onus is not on the client to do the calculations. At all, ever. It's just, hey, this is how much I want to defer, Seth. Help me figure it out, and we figure out the methodology to get it done. And it's been very successful for clients. All of a sudden they turn around, and even though they know they're putting cash out, 401ks in general, in general are a great saving vehicle for not only the individual participant, but also for the company owner, which is also participant. Because it's a savings that happens automatically once it's set up, and it's huge. I mean, I have plans that have hundreds of employees, and some of them are not high wage earners, and on the participant level, they're putting away money slowly that they would probably never put away if they didn't have that avenue. Yeah. And that's really important for the clients, and for the participants, because you want your employees to feel positive about their financial future.
100%,
a client,
100%.
A participant or employee that doesn't feel confident about their financial future is a employee that might be distracted at work. Might be compromised mentally in figuring things out. So if they know, hey, I'm saving here, that's a huge lift. Even though at first it's almost like it's drip method. If they're done on a payroll by payroll basis, but they'll look over time like, oh my goodness,
it builds up. It
absolutely
does.
Yep.
Yeah. And I always tell clients, like, if they're not tax clients of mine who aren't business owners and they want to know how to lower their taxes, if you're just on a W-2, it's not easy. But I always tell them, like, if you have the opportunity to put into a 401k or some kind of retirement plan at work, do it. Do it.
Absolutely. Yeah, I mean, it's difficult for people to always, there are the exceptions, clearly, but in general, it's much easier when something is set up automatically for people, right? That's why they do bill pay, right? Who wants, it's so easy doing bill pay. My bills get paid. If I had to write a checkbook and log it all, maybe I would do it, but it's much easier to do bill pay, right? Automate it where you can. So that's what the 401k, it's advanced retirement planning with automation. Yeah, absolutely.
Less to think about. All right, wow. Seth, you gave us so many great things to think about and hopefully to plan for the future. It's my last question. Is there anything interesting that you could share with us that's appropriate?
Wow.
Like I said at the beginning, I've known Seth for a long time. So, we've been family friendly.
So what could I share? So from a parcel basis, I do have a rather large family. I have 5 kids, ranging in age of 21 down to twins who are 8 years old in 2nd grade.
Wow.
And from a hobby perspective, something unique about me, I am a big music aficionado. You know, like Bet and Alex. Alex is that's husband. I have now taken a big liking to country music.
Really?
Maybe not the same singers you like, but I have taken a huge liking to it, which kind of was a surprise to me personally. I'm pretty
That's how it
open-minded.
happens every time.
Right.
For everybody.
Just kind of like it just happened. I've always been a music aficionado, but it's a lot of the singers have appealed to me, and so that's definitely something that I talk about with some of my clients. You know,
name names.
What?
Who?
What'd you say?
Name names of country people.
So one of my favorite artists right now is Tyler Childers.
I don't even know who I don't think I know who
Yeah, you got to take a look. You got to listen to him. He's a great lyricist, great musician. He big giver of his time and of money. I think he supports something out. I forget where it is geographically, but you know, coal mining. You know, the Rust Belt, if you will, or coal mining belt. Or, you know, if you go to his website. That wasn't the explicit appeal for me, but it was kind of a nice to know. But he's definitely committed to kind of where he came from in terms of supporting families who might be struggling at this time in the coal mining areas. But amazing lyricist. I mean, I have a whole list of people that I love, but he's one of the ones that I follow pretty regularly.
I feel like you would be a Chris Stapleton fan.
I am. So that was my entry into that, and then
I could see that.
I started down that path initially, and I took another fork in the road, if you will, and have gone down the path of Tyler Childers, Whiskey Myers, Billy Strings, all kind of random names that I probably didn't know a year ago. But
that's
great
awesome.
lyrics, great musicians.
I think Chris Stapleton's coming down here like in the next year.
He is. Yeah, I think he's going to. I don't know what they call it up in West Palm Beach.
Oh, is that where he's going? Cruzan, Perfect Vodka.
It's not.
Name.
I think it's something
names
different.
In a long time.
But yes, all of the above. All of the above.
Formerly known as.
Right, Prince. There's just a symbol on the amphitheater now.
They might as well. At this point. They've changed the name like so many times, but yeah, that's awesome.
Yep.
I would kind of want to go to every concert I hear at this point. It doesn't matter what it is.
It's
so long. I'm like, I would go to a polka concert.
You would go to what?
A polka concert at this point.
Really? That's good to know. I'll keep that in mind.
So starved for live music after the pandemic.
I hear that.
It's been rough.
I hear that.
All right. Well, Seth, thank you so much. This was fantastic. Absolutely. We're going to share out your contact info if anyone needs some serious planning. We put away some serious money. It's amazing. All legal. All legal plans.
Or it could just be you want to speak with an advisor, kind of, even if it doesn't have to do with retirement, to do comprehensive wealth management for clients, and it doesn't have to be exclusively dealing with business owners. We obviously work with all cross sections of people. So if you want a second opinion, definitely more than happy to speak with someone and see where that goes. And thank you so much for the opportunity to meet with you and your dedicated followers and your audience.
Fantastic, and we will see you next time.